Welcome to the Global Business Chat series. In these interviews, Wes is chatting about all things business to serious professionals from a variety of industries. Listen in to hear more about their challenges, opportunities, and the lessons they've learned along the way.
Hi, Greg. Thanks for joining the Global Business Chat. How are you today?
Not bad, thank you. Good to see you, Wes.
Yeah, good to see you too. Thank you. So we're talking at the moment, the series is around property development, construction, building, and you have a great background and experience in the development side. How did you get into property development?
I suppose over a long period of time, I was a financial advisor for an independent company, self-employed, commission-only type that got me into the market. I was there for a couple of years, and then I moved into a corporate estate agency as a mortgage arranger, which was great. That sort of taught me more about the property market, which I hadn't really been involved in. I think I'd arranged about 2 mortgages before going in there. And then we were arranging sort of 15 to 20 a month, and that was locally. So I got to understand the local market, mortgages, the lenders. We weren't tied to that one particular company, so we had sort of free rein. And that was quite an eye-opener, really. It was quite interesting, and obviously helping people buy their first property and see them move, and they'll come back in a couple of years when they've had children and want to kind of move again. So it was nice to kind of provide that service and see the market change as well. I then moved to another couple of different estate agencies and ended up spending 7 years with probably the biggest independent in my area, where I got up to the position of running their financial services team. So we had about 7 or 8 advisors, all compiling tens and tens of mortgages every month, and we were one of the kind of main producers locally. And then I suppose it started in the late 90s, financial advising. It was probably very early 2000s when the buy-to-let market started to pick up, and lenders started offering buy-to-let mortgages, and the public, and well, not so much the public, I suppose more the experienced landlords were seeing that there was a market to expand their portfolio. And prices has always been quite flat and quite stayed, but then as the market started to change, the lenders started lending more. There was a big surge in property prices around that time. So the buy-to-let market really picked up, and I took a sort of special interest into that because it was a little bit different, and it's different type of lending, different type of customer. So I got involved a little bit and got a first property. That led on to sort of number 2, and then this sort of grew and grew a little bit. And of course the prices were literally changing every month. My kind of sideline was equaling my income. So about 2003, 2004, I decided to leave my full-time role, which was changing quite a bit. It's working 14, 16 hour days. Regulation was increasing, so the paperwork was tripling all the time. I found I wasn't really enjoying my job. So I took the plunge and left just to seek smaller developments to try and earn the same income I was earning, but from working a lot less. And that's how it sort of grew, really. I'd met up with some other local developers. We did some joint venture, small developments, whether it could be a single flat, a house into 2 flats. And it just gradually, I suppose, transpired from there, really. We got talking to a couple of banks that saw we had a little bit of history, so we had a credit line from them and just slowly sort of got onto slightly larger projects.
So the credit line that you had with the bank was quite a pivotal part of the process?
Massively, yeah. I mean, unless you've got poodles of cash, which we certainly didn't, banks are crucial. You need obviously finance, whether it be bank or private finance. We did go down the private route quite a bit because that was just a little bit simpler, albeit a little bit more expensive, but it was instant. You had less hoops to jump through, a lot less paperwork to get the deal quickly. If you're offered a deal, there is a deal out there, you need to move quickly.
Yeah.
Especially nowadays, you could be waiting months and months and months for bank approval, and they could change the goalpost right at the last minute. So yeah, cash is key, or a very good kind of bona fide credit line.
Okay, excellent. And so through your development history, what would you say were the biggest learnings that you'd say, like the 3 biggest learnings?
I suppose research, really. If the development's in your local area, you've got a good understanding. If it's not, you're solely relying on other people for the knowledge, whether it's a state agency or land registry or other people there, valuers. But you do have to make your own call on it. Sometimes they can be wrong, so you do have to do your research sort of thoroughly. Builders, I'm not a builder at all, and never be a builder. So, as a term developer, so I do rely massively on who builds the projects for me, whether it's an individual or a firm. As the firm becomes more costly, I feel they're more organised and they can handle any single part of the development. Where I suppose the fewer people you have on site, the more is down to you in terms of paperwork and infrastructure and all the services to deal with. There's always a learning curve. There's always something new out there that you haven't come across before. Could be contamination in lands. It could be a planning consent or planning issue. There could be a restriction on the property that you bought. You can't do X, Y, or Z. So you'll never be a master of it. As I say, in every project, there's always something new.
Contamination of land is an interesting one, just for various reasons. I know, like petrol stations, for example, there's a number of years, and from memory, I want to say it's like 7 years, is it, you have to wait for contamination, or has that changed now?
I'm not sure if it's 7. It's probably longer than that, and I think they'll still probably insist on soil tests to confirm it's all okay, and then probably insist on some sort of membrane to cover the ground area. But that side of it with the council has gone, our local council has gone crazy. I bought a pub recently, and it was near to a marine barracks. So they asked us to carry out unexploded bomb survey on the site, which was a new one to us. So we'd spend probably £2,000 to £3,000 putting an expert in to look at old maps to see is there a chance there's an unexploded bomb buried somewhere in the pub garden. And this is the sort of thing that one didn't expect. So there's £3,000 gone straight away from your contingency. And of course, probably a 2 or 3 month delay in getting the results back. And then you have to then provide a risk assessment on how you're going to build the foundations while keeping your eye out for a potential bomb in the ground. Wow.
And so team is key from what you were saying, not being a builder, but team of either a company or tradesmen that you can completely rely on and trust to do the work. You mentioned about pubs, so pub conversions, is that you were talking about? So is that it's
died down a little bit, but back in, I suppose, the last recession, there was a lot of pub chains were shelving many pubs and selling them. So there's a big spate of pubs come on the market, which most of them were bought and converted into flats or completely flat in the new build scheme. So yes, they're not so common now, but they will always come up. So that's the only pub I've actually done. Right.
Okay. Yeah. So especially kind of in our local area, there was a pub on every corner at one stage.
Yeah. So, that's right. But the only downside with a pub conversion is it still looks like a pub at the end of the conversion.
Yes.
And some people don't like it. I'm not particularly keen on it myself, but some of the buildings are quite nice. Other than that, it's quite hard to kind of make it more residential.
Sure. Was there challenges then within the conversion? So, sorry.
Not so much. Well, I suppose there was in a way, because on this latest one we did, the council, because it was fairly close to our old marine barrack, they didn't want to change the image of the building, the build line, but including the windows and the doors. So we were dictated to a little bit by the council of what type of windows, which then dictated the height of the ceilings. They wanted the doors where they were. We didn't. We couldn't have the type of openings that we wanted to do. So they can get quite specific and almost dictate to you, which then alters your kind of final plan, really, and you have to work around them.
Yeah. Okay. Absolutely. And so just thinking about conversions, where do you see the opportunities coming, say, in the next 3 to 5 years in development or property?
I suppose there's always opportunity there, whether it be a small piece of land or a big rear garden on a corner plot. There used to be a little bungalow there. Anywhere there was land, there was potential to build something. There's a lot of potential for commercial buildings to go back into, or to go into residential. We're obviously quite close to the student market, so we've found a lot of the buildings close to the university are going into university accommodation, which then kind of forces the old traditional student house, which is a bit further afield. They're not being let now. So so opportunities on that side. There's a lot of commercial going back into residential. Freehold is always preferred rather than leasehold. So I feel a lot of other developers are preferring the freehold side, and I think they're always a little bit more favourable, albeit more expensive for the buyer, but a lot more simpler. And of course, you've got the leasehold with the residential flats, and with the ground rent kind of issues in government at the moment, that's sort of potentially posing a few queries, and lenders are very cautious with leasehold as well at the moment.
Yeah, no, absolutely. So where do you go to find these pieces of land? Is there like a specific website, or is it just contacts within the...
Not really. I mean, land registry is great because it's got the footprint of the property. So that shows you where it is and what size the plot is. Obviously, it can show you the owner, but so you can see what's around, and I suppose evaluate how good a development that would be. Then of course it's then approaching the owners if it's not on the market and seeing if a deal could be struck. Obviously a lot of people use Google Earth now. It's a great way of scanning a site quickly, seeing what's around, seeing what overlooking issues are, and what the condition of the buildings either side are.
So the land might not necessarily be up for sale. It's basically, like you said before, number one, doing the research, looking into it, and if you find something that you think could work, it's then doing that research on Google Maps, Google Earth, and then looking up who owns it to try and make contact.
Yeah, I suppose that's the harder way to do it. But yes, you can go on Rightmove, but if there's any development or piece of land on Rightmove on the open market, it's either at a very, very full price. If it was a really good deal, naturally it would be sold, it wouldn't be on the market. So most of the better deals are either passed to you through word of mouth, or they're off market. So I think anything that's around, advertised normally, it potentially might not be the best deal unless you've got a completely different angle or outcome you feel that development could provide.
Sure. Okay. So new developers that are looking to come into that and maybe watching this, it's basically networking, getting those contacts so that you can get those deals that aren't showing on Rightmove.
Yes.
Yeah. Okay.
Yeah, I mean, there's a high network of site finders that literally all they do is they share sites. They'll charge a finder's fee for providing the site to you, and you'd have to pay that fee on successful completion. So they're, I suppose, independent agents, but they'll probably have their network of people, potentially agents as well, where they'll have sites that someone will want to be moved quickly, but without going on open market. Now, so these people will have a good connection with high kind of net worth landlords or owners, sometimes developers, that will then just want pieces of land or properties sold.
Okay.
And that takes sort of a few years to sort of build up, and also the trust as well, because obviously they'll want a fee from doing it. So you have to, again, just because it's being sold at X price doesn't mean it's a great deal. There could be a reason for that. So that's when you have to do your own research and realise, okay, is it a profitable deal?
So have you found a trend on any of the deals that you've been looking at, say like over the past 10, 15 years, for ones that have really worked like absolutely amazingly well for you, where the returns are better?
I suppose the better ones I've had have been off market, mainly due to the price, or maybe there's an angle the seller or the seller's agent hasn't particularly seen. And also that some people just, if they're selling a site, they're happy with their figure. They may not be greedy. I know it sounds crazy, but sometimes that's the case. So that's the kind of the better ones I've had have been from that route.
Excellent. And so interesting, going back to you saying about dealing with either like a contracting firm, so like a building firm, or independent contractors. We've seen, well, there's loads that we kind of check over for clients. So we'll check over, say, the contractors or risk policy, contractors combined policy. And it's interesting, once you actually get to know the contractor and understand the work that they're doing, there's various elements. Either could be like contract works value isn't enough. So if they're doing a new build, for example, they could be doing a new build of houses, and that rebuild could be £1 million, but they might only have sort of 700,000 because it's not been reviewed. You've then got a gap of 300,000. So, yeah, and one of the other aspects which we find out is always the hired in plant element, which is very rarely correct, the contract works value, and also timber frame construction. Do you get involved much in timber frames?
I haven't, no. No, we've never done a timber frame.
Okay. So, and a lot of the kind of, I wouldn't say big contractors, but a lot of contractors out there don't realize that that's such a big deal for insurers. And there's not actually that many insurers that do it. So it's, yeah, we found it kind of invaluable for those contractors to actually have their insurances reviewed. And I suppose where I was going with that is because you obviously use contractors and you've got a firm, you probably assume that all of their insurances are correct, accurate, and will pay out in the event that something goes wrong. Which
yes,
is
right. Yeah, you would naturally assume, and sometimes you don't know everything to ask for them and to check their policies for those reasons. Because obviously we deal with you, and we insure many of our blocks, that I sort of know enough to that. But as a safeguard, if you've got a bank involved that are lending X onto it on the site, they will ask all these questions as well. Normally there's a solicitor's firm that will oversee the bank's paperwork and your solicitor. So you'll tend to find they will ask for war and peace, which is annoying in a way because it's time and effort, and you think it's not, it is a waste of time, but they will pick up all those items that you mentioned, that the cover isn't enough, we haven't got this, we haven't got that. So that's another kind of level of safety, that if there is a lender in the background, they will probably pick up on that.
Absolutely. No, that's great, thank you. And just another thing, another bow to your string is obviously like the letting side of business that you have, which I believe is going really well. So yeah, how's that been for the last 18 months?
It's been fine, really. Yes, there's a little bit of a dull area around March last year, naturally, but I suppose we rent to fairly professional people is one word to say, but we do reference our tenants quite thoroughly, and they're all a good bunch. So when things got difficult back in March, April, yes, we had a few phone calls saying they couldn't afford the rent, but touch words, it wasn't a bad time at all. Also, we couldn't carry out any viewings, so our viewings targets were not quite what they were, but once we got a lot of the properties on video, we were then WhatsApping foreign students or people wanting to view, creating 360 video tours of it, and we were just letting the property that way. So people have to move for various reasons, so they were still having to find a way of doing that. So it made us change our kind of daily structure and routine a little bit, but touch words, we had a great year.
Excellent. And do you know what, you just hit a real chord then with the referencing that you do for tenants. And the reason I say this, we've been contacted this week by a client. We don't insure the property, but they're having issues. It's insured under a separate block somewhere else in the country, but they effectively had their unit damaged by tenants, so malicious damage by tenant. And they didn't realise, but they've just been sent from the broker that was arranging it, that one of the conditions was referenced by tenant, or for the tenant, sorry. Oh, really? So, and it's a condition in most policies. It's written into the wording that in order for malicious damage by tenants to be covered, that the tenants would need to have a written reference. And this particular client, he decided that he'd try it, do it himself. So he'd found the tenants. It was all done online. Didn't get the references, and now there's thousands of pounds basically not covered because he didn't get the references. And this is where letting agents come in, because they fulfill not only the references, but they also fulfill the requirement to visit the property. So like a 6-month review.
Inspection.
So inspection, thank you. So, but yeah, you said about the referencing, it's a vital part of the letting side, and one of the reasons to absolutely use an agent, isn't it?
Whereas, yeah, we found that key. One, you know your tenant fairly well. Obviously, referencing isn't the be and all end all. You know, so we've had various tenants that have had a default CCJ in the past. Doesn't mean that they're not going to pay their rent, because it'd be a hiccup for no reason at all. So something gives you a good sort of snapshot of that person. There's more, I suppose, affordability. If you've got, it happens now and again, say young couple trying to rent a £3,000 a month property, but they've declared sort of £12,000 each. You know, sometimes things just don't add up. So that's when also you need to look into it more. But yes, we found it's quite a good key. It's more a service to our landlords as well. Obviously, it helps us as an agent, because we don't want to put a potentially bad tenant in a property that's going to make work for us, and also not make us look very good in front of our landlords. So it's a little bit of both. But we know when a tenant's gone in there, we've used a reputable referencing company, that tenant has got a fully vetted tenant in there. And for those reasons, it could be for the insurance. Sometimes we offer rent guarantee. So again, that's all key to that. They have to be referenced. But I think I suppose it helps us as a way of our business. We're not spending hours and hours over non-profitable time. And of course, the landlords, they're getting their rent in month out.
So by the sounds of it, you've got a lot of landlords that have been long-standing clients of yours.
Yeah.
And so have you seen any trends, say, over the last 3 or 4 years, and anything?
I suppose some of the old school landlords, they've had the property for probably 10, 15, maybe longer years. And we've seen, I suppose, the older generation landlords think, okay, the market's good, we're going to sell, we're going to enjoy our money now. And then that property is then sold to either new landlords, and they kind of start the cycle again. But going back to what I was saying about the student properties, where if they're not in the desired area, well, years ago they were fine, but now there's so much more student accommodation around the centre where we're based. These properties are now going back into residential. So shame for us, because we're losing a landlord and now losing a property. If we sell to another landlord, it's fine, we tend to get the business back. But so sometimes we've seen a bit of a shift of kind of old rented properties going back into residential. And also some of the older generation landlords who, how can I put it, tend to not spend that much on their property, and it's rentable but it's tired. Those properties aren't really getting looked at now. I think the condition of the lettable properties is increased, so it's forcing some of the landlords that don't like to spend on their property having to update them to make them nicer in order to let.
Sure.
And of course, there's much more competition now as well.
Yeah, what, for new landlords entering, do you mean, or
for tenants? There's so much more property available, although it's still in high demand. But there's more and more people, general public, of course, can just either have a buy to let themselves, and there's another property going on the market for rental. So again, the older kind of, not so much slumlords, but they're struggling now to find tenants.
So yeah, it's interesting with regards to like new landlords. We saw, or we are still seeing actually, with regards to the change in the tax, because they changed the stamp duty, didn't they, if you own more than one property. It's like, any words of advice or wisdom to landlords that come in?
It's getting tougher. Landlords seem to get hits every budget, and we've probably had 4 or 5 hits in a row now. So it's not as profitable as it was. It's harder now, obviously, with the new regulations. We've got electrical regulations now, which every property, you're probably looking at anything from £200 to a couple of thousand, depending on the state of it. So it is more costly. And of course, with all the additional sort of tax, you've got council tax now with no void period allowed. So if it's void for any time, you've now got to pay that as well. So it's getting harder. But at the end of the day, you've still got an asset there. You've got something you can feel, touch, and potentially sell quickly should you ever need the cash. So there's still people interested in it, and a lot of them they're even happy with as low as 5.5% yield on their investment, which to sort of older generation landlords, that's really low, but people seem to be happy with that.
Right, okay. And you talk about new regulation. Was that in line with like the gas safe or the electrical certificates?
It's all electrical, yeah. Gas safe's always been around, but new EICR regulations that are formalised now, even for existing tenants, which is a good thing because it is bringing the properties up to a good standard and it's safer for everyone, tenants especially. But it's just another, let's say, that's another cost. Or landlords, if you've got a portfolio of anything from 20 to plus, I know one of our landlords has got about 150 properties. Multiply that by 250 to 2,000 per property. It's quite a hit.
Yeah, absolutely. And you know, actually, it's a relevant point, because when the electrical certificate come in as a legal requirement, it changed the conditions within a property owner's insurance policy.
Okay.
So, whereas before, if you had an electrical fault, it was only a recommendation that electrical certificate was carried out on a residential every 5 years. But now it's a requirement, it's a legal requirement. So by not having that electrical certificate, if there was an electrical fire, insurers could actually void the insurance because you're in breach of the condition of not hitting a legal requirement. So it's very interesting, and I'm not sure how many landlords actually know that.
How would that work? So in a block of flats, 4 flats, everyone's done their EICR all up together, bar 1 flat. They have the fire.
So it's only if the flat is let out, then it's the landlord that would get penalised. But if someone's living in the flat, so it's not a legal requirement on main residents or leaseholders living within their flats. It's only a requirement if it's commercial. So commercial would be deemed let out. So if that flat was let out, then the landlord would be in a world of pain, basically. So they'd be breaking the law.
But everyone else within the block would be fine. They'd be covered.
Correct.
Right,
yeah.
So that would be quite disastrous.
Oh, there you go. Every day's a school day. So but again, I suppose for new landlords that are looking to come into it, if they've got one property already, and I suppose a lot of clients start off with their main residence, then they either meet someone, kind of move in somewhere else, but let theirs out. It tends to be more accidental, and then they just build up refinance to then get others. But if you were actually actively looking to do it as a business, similar to what you said, where you get one property, then the second property, your income almost kind of not contras, but matches your working income, and then you get to this place where the work is it's not making you as happy as what it was necessarily, not you personally, sorry, but people listening. It could well be that you get to a point where you're not that happy in work life, but the income coming in from the property is subsidizing it enough to perhaps make that jump. And where I was going with that is it's then deciding on the best strategy, whether like setting up a limited company, or if you're doing it yourself, it's then working out the tax and the figures. So the figure element of it must be really important.
It is, yeah, and you can structure it sometimes. Say you buy a property in your personal name, it's quite difficult, quite costly to suddenly move that into a company name. If you've got a mortgage on it, that can be even more tricky. So yeah, it does take, it's a little bit forward thinking, and it's a little bit of a gamble because who knows what the tax rules and laws are going to be in 5-10 years time. But yeah, there's certain things I've done that will either move money to buy a property with a mortgage, without a mortgage, and that has backfired a little bit, in which I thought, okay, there's a better way of doing that. So I'd say to anyone looking to start is spend some time speaking to some accountants and other landlords and just finding out the best way. If you're maybe only thinking I'm going to get 1 or 2, then there's another probably different way of being more tax efficient. If you're thinking about getting 10, 15, 20, then there's probably another route that will go down. It could be more costly initially, but long term you'll probably have either more flexibility and better tax breaks.
Okay, and I suppose you'd need to speak to a specialist accountant rather than just
I mean most accountants should be able to investigate that fairly easily, but if there's one that's particularly in the property market or has got other landlords and potentially developers, then yes, they'll be worth talking to for sure.
Okay, excellent. You also manage blocks as well, don't you? So you manage blocks.
Yeah.
Yeah. So let's talk a little bit about the block management, because blocks of flats. Obviously, we arrange insurance for many blocks of flats, and the managing agent side of it is an important pivotal part of that as well. So I suppose from your side, what are the ups and downs of managing blocks?
If it's something new to you, it's how can I say it? It's not fun. You have to have the infrastructure in place. They're quite challenging at times. They're not fantastic earners. It's not going to make you rich overnight, but it's a numbers game. Where we tacked it onto our lettings company and sales side, so we find it's a really good in. So we'll get referrals from if it's from a new block we've taken on. Now we're speaking with all the owners. Where if you're traditional out there door knocking, letting properties, the owner's never there because the property's rented out. So we're speaking with the owners, and once they've come on board and they see the level of service we do, we then offer them our letting service and sales service. So a lot of it's been kind of not a lost leader. It still kind of generates good income on its own kind of department, but it's a nice addition to add. And we're finding that a lot of the self-managed blocks, so the freeholder, where it's one or all the lessees together, it's becoming difficult for them. Rules and regulations are changing. Again, electricity, fire risk. They're now getting it's a little bit above them. They've been doing it as a hobby, or thinking, okay, I don't want to pay an agent because it's another £200 a unit a year. We'll do it ourselves, and they could potentially become unstuck and could be up for manslaughter if things went really bad. If there was a fire or some sort of issue there. So we're seeing a kind of recent spate of people that have been managing it on their own for quite some time, bringing their block to an agent now, saying, look, it's got too much for me now, can you just look after it? But yeah, blocks we enjoy. If you get a block on, provide them with a good service, they'll stay with you, and that's all the people want. They just want lots of value for the money, but this one, the block maintains. You'll probably find half of it in our area anyway, at least 50% will be rented out. So you'll have the owner occupiers wanting to keep the block, very tardy, and then you've got the landlords that think all the time, get my rent, I don't really care what colour the door is. So you do get like a bit of a mixed bag. But yeah, I think if you get in there and provide that service, they'll be with you for life.
And is it normally the directors of the blocks? And normally they have like a limited company.
Yeah, that's right. Normally there's an RTM in place, right, to manage all the freeholders have bought it in a company. But we just had one the other day. It's all in personal names. They've self-managed it for years. But there's a little bit of unhappiness between a couple of lessees. So they want somebody to run it, so they're not arguing with each other, and we become a bit of a mediator. But and of course we have to abide by the lease. So it's quite easy to explain to them, okay, that can't be done, or it has to be split this way because that's what the lease states. So sometimes this needs someone in there to, I suppose, not help the arguments out, but to make it a little bit simpler for them to explain, okay, why something can't be done and really kind of what has to be done.
Sure. Yeah, no, absolutely. I can imagine. And I think what I was just thinking then is a really another important factor, especially for like RTMs and limited companies for blocks, is the directors and officers insurance.
Yeah.
And you hit the nail on the head. It's like some of the directors that have been trying to manage it themselves. It only takes one kind of error, and it could be that they appoint a contractor that goes bust, or it could be that they forget to, I don't know, service a lift or something, and which then leaves them open to.
Yeah, it could be. It's just something that I didn't realise, I suppose, how important that is until we spoke about it some years ago.
Yeah,
but it is. Yeah, it's something that we do offer to all RTMs, and it is for the cost of it. It's silly not to have it, because it's just one of those things that you think it will never happen, but it could quite possibly happen, not for any fault of your own.
no, absolutely, and I suppose that's the whole point of the directors and officers. It protects the personal assets and the fact that they get. So it's yeah, and like you said, the cost of it isn't astronomical, especially when you're comparing it to the block insurance. Yeah, no, it's a really important but kind of interesting part as well. And
it is, yeah. This is probably one of the later insurances that we realised how kind of crucial it is really, and everyone should have it. And in fact, we're just putting a process in now to have confirmation back from the freeholders if they don't want it, just so that we can show that we've offered it. They've said no, so we've got records in case anything comes back on them, because I'm sure there'll be the odd one that will potentially say to us, well, you didn't tell us about it, or we didn't know about it. So we're now building it in as part of our process.
Absolutely. And claims as well. I'd imagine you get, I know because we do some work together, but claims on the
Sophie's very busy.
So yeah, absolutely. She loves it. She thinks we're pages. No, I know you've got a great relationship with Soph. But on the, she is. She's awesome. And I know she's had a lot of dealings on the claims front as well, which is mental.
No, she's really worked hard on some of ours. I mean, one in particular, I think was just went on for months and months and months, and soaked up hours of my life, and must have been twice as much for her, bless her. But she really did well.
Yeah, absolutely. And do you know, that's one of the key points for a broker, really, and where we try and stand out is kind of ring fence and put clients in a bubble and deal with most of that stress. Although I appreciate in this instance there was still some stress on you, but the main point is to kind of be the main point of contact between the agent, between the leaseholders, between the freeholder, between the contractor, and then the loss adjuster. There's a lot of different aspects to it, and like you just picked up on, it does take a lot of time, but it cements the relationship.
Definitely. I couldn't recommend it enough. It's just I think it's one of your key pluses. Yes, obviously your insurance is very good rates, service and process is fine, but in addition to that, it's not a case of here's insurance, see you in 12 months time. You're there for any queries, but particularly claims. So it's a great addition where you'll come to visit the site as well. Yes, I'm going to big you up now, but it's been
thank you.
It's been a real plus for us, and it's something that we actually use when we're speaking to the freeholders. If they've gone down to a direct line or some company online, they're going to get zero service. They're not going to get the backup. Yes, the insurers you'll recommend are more expensive because they're proper insurers. They will pay on a claim. But on the back of that, at no extra charge, you've got your team there able to either deal with the claim direct, or if the freeholder, I suppose, wants to do direct, you'll do that. Meet on site, meet the loss adjuster. There's so much goes on behind the scene that the lessees will never know, and sometimes it's hard to explain to them because they've never gone through that process. But a couple other blocks that I've spoken to, they have had claims. They've had to try and organise it themselves, and it's been a nightmare. So they would happily pay over and above just to have that kind of helping hand service.
Awesome. Thanks for the big up then, Greg. That was
it's great.
Thank you so much. So I appreciate been keeping you quite a while now, but do you any kind of like final words of wisdom or anything that you see changing that you'd like to
what, on the development side or market wise?
Market wise,
I think market, not probably talking nationally, you can say I'm really down the south, but I can't see much happening, good or bad. I think it's just going to be a steady increase. I don't think there's going to be any sort of real peaks or troughs. It's just going to be steady. So I think property is still a good investment. Long term, if you can keep hold of it, fantastic. If you're looking to turn it over, quickly to make the money, it's just be very careful with your figures, acquisition cost, build cost. It's always the same key points. Do your research as much as possible. Don't trust every agent you speak to. Always shop about. Look on house prices on Rightmove. It will show you what's physically gone through completion, albeit they're sort of 3 months behind, but it just gives you a good indication. But I think property-wise, it's still a good market, and just keep your eyes open for any opportunities.
Awesome. Okay, that's brilliant. Thank you. And look, thank you so much for joining us today. It's been awesome to have you as a guest, and really appreciate it.
No problem at all. Nice to speak to you. Take care.
And you.
Thank you for listening to the Glowshaw Business Chat series. If you'd like to be a guest on our show, or if you'd like to discuss how we can help your business mitigate the risks you face, please email Wes on wesleyhaines@glowshaw.co.uk.